Hello everybody, welcome to our trading room. Joe with you here for the weekend going into February 17th to the 21st. Let's jump into our action. You guys know how this works. Take responsibility for the outcome whenever you guys follow along with this. Let's break down some of the news for the week. I want to take a look at these markets on a broader scale and see if we can identify any sort of emerging patterns. And then we'll see if there's some sectors we can look at and maybe even some trades to share with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
Real quick, folks, just a little update that we still have availability for the 15th annual summit here in Vegas on the 26th and 27th. So make sure if you're interested to go ahead and register on our site. Moving into last week's news, folks. Yep, there's always something that has been coming out, especially this year. So let's just jump straight into it. Trump extends tariff deadlines, moving it to more of a case-by-case basis on some of the countries that tariffs have been threatened with, China, Canada, and Mexico. Expectations were them to be implemented as early as this month. It looks like it's going to be probably somewhere in April. However, folks, that can change, so just be aware of that. The dollar itself actually was lower after that news. It's been strong for quite some time, but it slid a little bit yesterday and actually a little bit more today. Inflation still remains sticky. The CPI is higher than expected. We'll take a look at the economic calendar here in a second. Not huge, but enough to show that inflation is still a problem. The Fed's looking to stay restrictive for now, taking the idea out of interest rate cuts here anytime soon. Earnings reactions so far are mostly positive, with the financial sector leading in beats. It's about an 80-something%. You can just go take a look at it. That's something we're going to probably want to follow as we get further, deeper, or even towards the end of earnings announcements. So here's our calendar for last week. Here's the CPI number that I was talking about. You can see that it did beat pretty much everything month to month, year to year, the core, all of that. Powell came out and said that, hey, you know what, showing a little bit of stickiness. It's kind of still in line with their expectations, but maybe continuing to cut rates is probably something I don't know. We'll see what they're going to do. The PPI itself came out a little bit later, a day or so there, or the next day, and it was also showing in line, slightly higher. Unemployment claims a little bit lower. One thing that I thought was interesting today was the core retail sales. And so retail sales dropped a little bit from last month. So we do have a consumer that's actually showing the first signs of slowing, even though the CPI is showing some expansion. So I don't think there's too much to take from this, except for the markets reacting to it quite a bit. Moving into our market analysis, we'll take a look at how we did, and it was positive overall. Let's just get straight into how we finished for the week. Dow was pretty much flat, still up over 0.5%. The S&P and the Qs were the big leaders, 1.5% on the S&P, Qs over, just about shy of 3. A lot of that has to do with earnings. I truly believe that. The Russell completely flat. I thought that was interesting. It was tumultuous nonetheless, but it did finish pretty much flat for the week. Oil down slightly and gold up a little bit as well. So the main driver was pretty much just what the markets did, and I truly believe it has a lot to do with earnings and their results. Those tariffs do push and pull on the markets quite a bit, but it's been interesting to see how they can recover so fast. So let's get into this flag pattern you've seen me draw over the last long time, and here we go. We finally broke out of it. It's a very nice candlestick, pushed a little bit higher. I'd like to see a little bit more volume with it, but nonetheless, it's a positive move, it's a positive push, and it has definitely showed some signs that we can actually turn it up a little bit when it comes to our bullish outlook, at least for this week. Getting into the Qs, it's the same thing, but actually a little bit stronger, right? I just told you the Qs were just shy of 3% for the week. So not only did it kind of break out of its resistance, it's actually threatening some highs that it set a little while ago. So we're right back up to it. Now, could we get hesitation? Absolutely. Could we get a little bit of pullback or some sort of worries over the weekend? Absolutely. Or some sort of policy change. There's always that. But overall, folks, on the technical side of things, it's exactly what I want to see, to up from a +1 to probably a +2. Here's the weekly outlooks for some of the SP 500 index guys here. Some of the larger players in the market. Let's get into Apple, up 7.5%. Nvidia, 7%. The ones that you'd expect to move have moved. A lot of them are going to be hinged out on announcements and earnings. So nothing's really changed. Well, what can we expect for next week? More of the same. Policy changes and updates will continue. Who knows what's going to happen next? We will be updated when it does happen. So expect volatility and reaction next week, same as we did this week. The weekends are always interesting. Right? We could see what happens in the futures as we get into, I guess it's going to be Tuesday, right? Monday is President's Day, so we do have a longer than expected weekend. So expect volatility when you get back, but let's try not to play the reactionary game. Earnings season will also continue. Let's follow the price action after earnings results, and let's start to focus on sector performance. I'm saying that there's some good earnings out there, but I still don't see an emerger. I see some struggling in the energy sector and industrials, knowing that financials is doing pretty well, but we're not all the way through earnings. But some of the reaction I've seen in the communication sectors and some of the tech has been pretty big. So we got to start focusing more on how the sectors are going to come out of this. And then economic events, we got the FOMC minutes on Wednesday. Okay, what does that mean? Nothing. It usually doesn't mean anything. What? Maybe if Powell comes out and says something, well, I'm looking at this, we're worried about that, we're thinking about this, it might cause a reaction. You can see it's going to be a couple of days in after we come back from a holiday. It might be nothing, but then again, it could cause another jolt or volatile day. So just be aware of that. So I think if we can get all the way through that, I think it should be smooth sailing, barring any of the unknown unknowns, as Corey likes to put it. So here's my outlook. It's pretty obvious. I'm going to be +1 for the week. We are at a level where we're seeing some resistance, but there was a great push yesterday up and out of that flag pattern above the averages. They're sloped correctly. My monthly outlook is at +2. I had to jump up to get a little bit more on the bull side. Now, it's still individual stocks, and you'll see here, as we jump into our sector analysis, they're still pretty difficult to kind of figure out. So how did we finish? Pretty much everybody was a little bit up. Healthcare slid. Now, I think one or two of those were some larger companies that had some earnings or some sort of announcements that made them slide. But overall, you can see that we did pretty well. Communication services, very strong. Technology having a big bounce. A lot of that has to do with some earnings. Don't know specifically how they're weighted, but very positive. So let's just jump straight into these and see what's happened technically, because I didn't get some clear cuts, especially when it came to the consumer side of things. Made things a little bit difficult. Let's start with utilities as always. I'm seeing more of consolidation in this one. We've seen this consolidate for quite some time. Flip-flopped back over on the 20 to the 50, so those are back. Those are looking good. I could give this kind of a glass half full outlook. However, it hasn't done enough for me to really kind of upgrade it from where it was before. So I'm just going to keep this at a 0, more of a consolidation sector. Complete opposite, we'll move it over to the communications. And yep, we are starting to see reinvestment in some of the larger companies, right? Some of the ones that we've seen from last year, and it seems to have a pretty good push. So nice high base breakout, continuation as it kind of consolidated right around this area it was at before. We had it at a +2, makes sense, and then boom, off and running. So it was pretty easy for me to bump that from a +2 to a +3. And we'll see what it does. Now, keep an eye on it, because when you get extended, usually correct. So if there's something that looks overextended, take your time in jumping into it. Over to real estate, more of the same, a little bit of a consolidation. A couple things that I did like about real estate is this high base. It seemed to stay there. Even with today's action, it gapped and traded down. We just barely got across on that 2050, although the 50 is still sloping down. Could I keep this at a 0? Absolutely. Could you call it a 0? Sure. I just went ahead and said, look, it's kind of tight at that area. I like that base and how it's staying above those averages, so I just moved it up to a +1. Now, moving over to healthcare, this one was a little disheartening. Healthcare, I always had it a +1 or stronger looking sector, but today's candle, I just really threw things off. It looked a little anemic here as it approached the top, but then it had this slide. Expecting, okay, nice consolidation, and it's going to do exactly what everything else did, is kind of move higher and maybe threaten this area, and it didn't. Just flipped. Now, not a lot of volume on the participation, but it flipped, and it flipped pretty definitively. It's below that 20-day moving average, so I don't know if it's done yet. I don't really want to beat it down, but I am definitely going to be cautious on it. So I had it slide to a -1 for obvious reasons. It's moving lower. It's below the 20-day moving average, and the 50's flat, right? So I have to keep that at a -1 for now. Jumping over into industrials, kind of something else that really hasn't gone anywhere. Playing the same kind of reactionary game that everybody else is. So it looks like it was dropping after it peaked here, kind of an inside or an island gap it's referred to. But this last gap down, it's trying to retrace, but more sideways. I'm not getting a lot out of them. A couple great places, maybe a place to look for some sideways trades if you need them, but it's really not doing too much past that. I'm just going to go ahead and keep it as a 0. Let's move over to the financials. The financials being one of the stronger sectors, having some pretty good earnings in it, and some pretty good trades that are out there. Still staying at this high tide area. I'd like to see it a little bit higher, so it's still within a ranging high base. I would like to see it push out of that before I gave it anything more than a +2, which I'm going to leave it at. If it does something like communications, then I could bump that up to a +3 for sure. But +2 for financials. Continuing over actually from last week. So let's get into consumer discretionary. This is where it gets a little bit interesting. Now, consumer discretionary, to me, I thought was pretty good. It was sitting here nice and flat, kind of a base, maybe a +1. This little drop here was a little bit discerning. However, we got a gap up and it's moving lower. So when I start to see something that's set a lower high here, but it's using resistance on moving averages, I get very excited. In fact, I would like to call this a -2. However, I'm not going to because it was seriously just that last day. We'll see what happens when we come out of the holiday weekend. But I'm still, where discretionary for me did show some pretty good trades in it. There's a lot of bad ones in there as well. So I'm just going to stay a little bit cautious and keep it as a -1. Now that also kind of carried over to the consumer staples or consumer defensive. I really liked it. I wanted to be a +2. In fact, folks, I have this as a +1, but take a look at today's candlestick. That was just really interesting. Volume's about the same, but it looks like maybe some profit taking going on in that. And when I went through these, folks, and I really did, I went through a whole lot of trades today on both the staples and the discretionary. And I just couldn't find anything that I really got behind. There's a lot of -2s in this sector. And then there's a lot of -2s in the other sector. And then there's 1 or 2 stocks that are straight up. So very difficult to play these sectors +1 or -1. But that's what they're ranked overall. Moving over to tech. Tech had struggled for a little bit, but it seems to be emerging. I like it. I like this move above the moving averages. The 20 looks like it's going to catch the 50. It's not there yet. Still got a little bit of hesitation ahead of it, or I should say some resistance ahead of it. So I'm just going to bump it up to a +1 there and see if it can't continue. Consolidate or move higher, and it could easily get to a +2. Finishing up here in the last couple, here is materials. Materials is consolidating. It did show a little bit of a heads up as it wanted to break out, but then it had an immediate flip. I could easily call this a +1. Absolutely, if you guys want to. Had a crossover here. This is sloping up. That's down. We could call that it did break out yesterday, kind of retested, which they usually do. So if you guys want to call it a +1, that's absolutely fine. I just kept it a 0 just to be safe. I'm not sure what's going to go on over the weekend, and there's nothing really I'm running to get into right now in materials in itself. At least in a direction, I should say. Okay, so let's move over to energy. Energy is still just kind of doing what it's doing. It's showing a little bit more weakness. I think it's going to continue to be weak. There's just too much stuff going on when it comes to tariffs and worries about energy demand. I think it just kind of meanders sideways and just kind of bleeds off a little bit. But once again, there are individual companies that are completely outperforming the sector itself. So I'm just going to leave it at a nice, safe -1. So overall, folks, we're not really venturing too far outside of that, but I was very interested to see not a lot of -3, -2, well, none in the sector. So we are seeing weakness in some of them, but it's not like they're getting beaten down or it's nothing catastrophic. Now the upside, yeah, we're starting to push up. We're starting to, communication services coming back, financials. Tech was actually the strongest sector for the week, percentage-wise, but the chart itself looks like it's starting to emerge. So there's a lot of good stuff going on. So that leaves us with our portfolio here, and we've got a few coming off. I think that's 5 right there. Yeah, we got 5 coming off, and we're actually going to kind of move it over. So let's take a look at what we're doing here. So we've got a 20-day and a 50, slopes right. The averages are stacked correctly. A breakout of a flag pattern, moving up, higher high, higher low. And It's easy for me to completely bump it up from a +1, I believe, is where we're at yesterday, or last week, to a +2. So we were at a 25431 scenario. We're just going to move up a little bit more aggressively, add one more +3 there, and that's kind of where we're going to move our score. Now, when it comes to adding it, this is where it got difficult. And what I mean by that, folks, is I wanted to put on a consumer. I wanted to put on something in consumer, either a +1 or even a 0. Actually, I didn't want to. No, I didn't. I wanted to do +1 on both consumer and consumer staples. However, there was just too much bad trades in there. I couldn't find anything that wasn't overextended. So I could find +3s or +2s, and I could find -2s, but nothing +1 or -1. And that's kind of what we're stuck with. So instead of forcing it, let's just fill the cards that we have. I've got a healthcare to -1 and industrials that's flat. And I got a +3 in financials, or +2, excuse me, in financials. I can add 3, I can add 5, I can add 10. All right, here, I'm just not going to force it. So once again, folks, I was digging for a while in both the consumers, staples and cyclicals. And I couldn't justify a trade that I liked that was -1 or +2. Maybe you can. Go ahead and take a look at it. With that being said, folks, let's jump into the possible trades that I did find. First off, it's going to be in healthcare. This is on the bear side. So I saw Bristol Myers here. They had their earnings. Their earnings were actually pretty decent. It was all green, but they fell out of favor, and they feel pretty bad. I like today's candle. It looks like it's rolling off pretty good. I'm thinking of two different trades here, both on the 28th. You guys can stagger these any way you want. This has the 21st available as well. I'm thinking of a 55-52 bear put spread, or if you wanted to target a butterfly at that 52, thinking that it might go a little further below that and come back up. That might be a good trade. Let me show you kind of what I was looking at on it. This area down here is where I think it's going to stop. I mean, I'll try to take it as far back as I can, but if you're down here at that 52 level and it falls really fast, it might bounce and it might kind of land there, and that's kind of the butterfly outlook. However, if you think it's just going to float lower and it's just not going to come back, well, then that vertical spread probably be a little bit better. Understand, guys? Just some suggestions. You could do it tighter. You could do it wider. I just like the chart. I think it's a pretty good trade to continue at that -1 pace that we're looking for. So move over to our industrials. This is going to be more of our sideways stuff. It's a consolidation. I'm thinking February 21st for both a targeted butterfly at 23, 25, 27, right where it's at, or if you want to do something a little bit more reserved, a 23, 25 bear call spread, just keeping that credit, thinking this is going to stay above that area. The reason behind this is we need to take a look at some of these trades. I mean, this looks like it's already got like kind of an ascending pattern going on. There is some pretty good resistance here. So I could see this, maybe popping up to this area and then coming back down, hence leaning towards that butterfly here at about 25. But if you think this is going to definitely continue higher and move and then continue off to the races, then you're super safe by, playing that 23, 25 credit spread. It's not going to be risk reward wise not there, but it's definitely going to be a zero trade for you. All right, let's move over to our last one, and this one is going to be in financials. And I like the Bank of New York or Bank of Mellon, whatever you want to call it. I also liked Citigroup, very similar in their pattern. So two choices here. The 28th, very aggressive, 87.92 bull call spread, or if you want to hit that 90 area, you could do a shorter time frame, which is just a week out, 87. 9093 butterfly. Let me go ahead and show you what those look like. So this is kind of the landing area. If you want to snap some Fibos, I think taking this into consideration, it'll be up in this area. So this would be your target for the longer term. I believe I said 92, 93 anyways. It's up in this area. And you're starting at this 87, so it's pretty aggressive. That's fine. But if you want to do the butterfly, this would be your landing zone in a week. This would be your target in 2 weeks for the vertical spread. And as always, guys, you can change it up to whatever fits your fancy and make it yours. But I do like how we have the increase in volume as that thing's breaking out. So what do I got? That's it. Expect volatility to continue. I don't think that's going to change for a while. This policy stuff's going to take its sweet time. We got to focus on the longer-term trend versus the short-term noise. And folks, it's actually helped. A lot of the trades that we've been sharing and been doing have actually hit max gains. They're either max gain or max loss. It's funny because the stock will either take off and continue if you follow that longer term versus the short term corrective action. It's been volatile. Sector analysis should get a lot easier and become more clear. Once we get through earnings, we'll see, hey, which sector did the best? Where's the money going into it? Whatever you do, just make sure you manage your risk, folks. It's okay to sit on your hands here. I mean, if there's no advantage out there, don't take it. I'm going to say it one more time. Not a real good place to build a portfolio. You should have the majority of your powder dry. Stay as much cash as you possibly can. And we'll eventually get there. We'll eventually start to put some trades out there. Thanks for joining me, folks. I hope you have a great weekend, and we'll talk to you very soon. Bye, everybody.